Welcome everyone to today's video in which I want to share why I believe Adobe stock and PayPal stock are the best stocks to buy in the stock market right now. They also remind me of some other stocks that I bought in the past and done tremendous, such as Meta stock when it was trading at around $100 per share, or Alibaba when it was trading also under $100 per share. And the first idea that I want to share is that market sentiment is horrible while fundamentals keep improving. For example, Adobe stock is down 38% in the past 5 years. Compared to last year, they are up 10% in revenue, net income up 28%, and EPS up 35%. PayPal down 77% in the past 5 years, while revenue keeps improving, although at a slower pace at 4.5%, net income up 11%, and EPS up 18%. And you might say, well, that's only a year. But if we take a look at the 10-year revenue chart, for example, Adobe has grown consistently at double-digit revenue growth from $5 billion to $23 billion currently. If we take a look at PayPal's revenue, again, from $9 billion to $32 billion currently, yes, it has decreased a bit in the last couple of years in terms of revenue growth percentage, but this is still growth. And the same applies for profit. Adobe's profit has 7x in the past 10 years, from $1 billion to $7.1 billion. Now, one thing that I really like is that they have even more free cash flow, again the same amount of growth, and it is currently at $9.8 billion. What about PayPal? Well, exactly the same. Net income growth from $1.2 billion to $4.9 billion, and again, even more free cash flow, currently at $5.5 billion. And this reminds me in a way of Meta stock because when it was trading around $150 per share, the fundamentals kept improving, but the story was that they were spending too much money on the metaverse. The same goes for Alibaba. While their fundamentals kept improving, people had fears because this was a Chinese company, but nothing to do with the fundamentals of the business. And right now, Adobe stock is down so much because the story or the sentiment in the market is that AI is going to take over Adobe. And the story currently with PayPal is that it is a dead company. However, we have seen that both their fundamentals keep improving. When market sentiment is bad for some reason not related to fundamentals, is usually a great place to start for finding stocks that are going to outperform the market and give you huge returns. These two companies also have very good margin. PayPal gross margin is currently at 41%. Their profit margin is usually between 14 and 16%, and their free cash flow margin is a bit higher, I would say between 16 and even 20%. If we take a look at Adobe's margins, they are even better. Why? Because Adobe is a software company. Gross margin almost at 90%, profit margin at 30%, and free cash flow margin at 41%. Another thing I believe is underlooked at when valuing these companies is the shares outstanding. As you can see, PayPal, for example, has been heavily buying back shares. Now, this is huge for investors because you own more of the company and share the profits with less people. And as you can see, as the stock has gotten cheaper, they have been buying more and more shares. I mean, last year, they bought 6% of their shares back, which is huge. And the same story goes for Adobe. The cheaper the stock has gotten, the more shares they've bought. And I love this about both companies. And keep in mind that analysts are still expecting both companies to keep improving their fundamentals. As you can see regarding PayPal, analysts are still expecting high single-digit revenue growth for PayPal. I mean between 6 and 7% annual revenue growth for the next 5 years, which is still a lot of growth and still very good. And even more for profit, as you can see from $5.89 per share this year to $9.23 per share in the next 5 years. If we now take a look at Adobe's forecast, it is true that analysts don't have Adobe growing at double-digit revenue growth in the future. However, they still have high single-digit, which is still very good. Now regarding profit, again, from $23.96 per share in 2026 to $33.60 per share by 2030. So still both a lot of growth in revenue and profit for both companies. And both companies are in a great financial position. PayPal's balance sheet is very good with $10 billion in cash and $17 billion in debt, which is very manageable for a company that now has a market cap of $51 billion. If we take a look at Adobe, again, an exceptional balance sheet. I mean, Adobe is basically perfect as they have no debt, $6 billion in cash and $6 billion in debt, so the same amount of cash and debt. And the market cap is $121 billion. By the way, if you want access to where I get all the stock data that I've shown, stockanalysis.com, the best place for it. You have my code value in the description for 10% off at checkout. Now, let's move on to the number one reason I am loading up on these stocks, and it's because they have become incredibly cheap. Let's take a brief overview, starting with PayPal. The forward PE is now 9, and the price to free cash flow is also 9 at the moment. But if we take a deeper look at the valuation with the discounted cash flow model, this tells me at what price you should buy a stock based on the assumptions about the future of the company that you put in. I did a 7-year analysis with low, middle, and high assumptions. Now, as you can see, the intrinsic value according to my low assumptions is $80 per share, middle 108, and high 144. And the stock is currently trading at $55 per share. So you can see how discounted it is. Now, because the stock is currently trading at $55 per share, this means that if my low assumptions occur, you would get a 17.5% annual return on your money, middle 23.5%, and high 28.5%, which are absurd returns, especially considering how conservative my assumptions are. I mean, I assume PayPal grows revenue between 4 and 7%. Keep in mind, analysts were expecting between 6 and 7%. I assume a profit margin and free cash flow margin between 14 and 18%, again what they have been doing. I assigned the PM price to free cash flow at the end of the 7 years of 14, 16, 18, and I assume they buy back 2% of their shares annually. And I haven't seen this kind of returns and how cheap it is since, for example, when I did Metastock back in the day a couple of years ago, as you can see here on the discounted cash flow model that I made, or also Alibaba, which was also extremely cheap. Now let's move on to Adobe, which historically is trading at an all-time low in terms of multiples. As you can see, it is currently trading at a P of 17, and because they have more free cash flow, they are currently trading at a price to free cash flow of 12, when this company has traded at a price to free cash flow of even 40. Now let's take a look at the discounted cash flow model. And again, as you can see, the main reason why I'm interested in these stocks. According to my low assumptions, a 13.7% annual return on your money, middle 19.7%, and high 25.6%. If you want to calculate intrinsic value, let's put our 10% desired annual return. Why? Because this is what the market usually gives you over long periods of time. 358 according to my low assumptions, middle 489, and high 656. And again, I believe my assumptions are conservative. Adobe revenue between 5 and 9%, profit margin and free cash flow margin between 34 and 42%, PM price to free cash flow at the end of the 7 years of 15, 17, and 19, and I also assume they buy back 2% of their shares annually. If you want to make your own assumptions, by the way, I'm going to leave a link to a spreadsheet down below. It is super simple to use because I've done all the calculations in the background, so you only need to input your assumptions. Now, full disclosure, Adobe and PayPal are currently my only two positions in the portfolio, along with Pinterest, although it is a very small position, but this is not financial advice and you should always do your own research. Now, I also want to say that I do keep some stock of the companies that have done tremendous for me, such as SoFi, Meta, and Alibaba. But these are the only two companies that I've bought in the past couple of months, and I have a huge conviction in them. I will also disclose my averages. Now, for Adobe, I've been somewhat lucky as my average is $299 per share, and with PayPal as well, as it is $57 per share. So very low averages, although we don't know if the stocks are going to go lower in the future. Nobody does. In that case, I will just buy more and dollar cost average. Now also, we don't know if PayPal and Adobe are 100% going to give you huge returns in the future. But in investing, it's about playing the odds. And if I had 50 companies like this, I would be certain that I would beat the market. I hope you found this video valuable. Let me know what you think about these companies in the comments, and I'll see you in the next one.